right, all right. How you guys doing? Welcome. I'm sorry, major difficulties in setting up YouTube today. I don't know what. It was very strange. They kept saying, "Oops, you can't do this. Oops, you can't do that. Oops, go fuck yourself." All right, so I managed to get this out to subscribers this morning. Um, what happened is we had this nice high base, which was bullish, and up we went. All right. I wish I would have got this live, but unfortunately couldn't happen. All right. So, and this was the post, by the way. Nope, not this one. Which one was it? Before this one. Anyway, I can't find it now. Is it this one? This one? No. All right. So let's go and figure out what's going on. Well, it expanded, not expanded. It explored the entire range thus far. Um, And like I said yesterday in the video, what we need to see at some point is for this structure to resolve to the upside. Okay? It doesn't have to happen now, but we do need this to move in one direction. And if it is to fail, then you fail from there. Now, it can happen another way that you will go incredibly bearish, right? So you're coming down, you're doing all everything, goes incredibly bearish, comes up, breaks, and then goes down or up. Okay. So remember, election day, a lot of emotions. Uh, the way to think about it is that humans always have emotions and react to things. They just don't necessarily always show it. And in the market, that's not possible. Right? You're going to see price movement. You're going to see, a certain level of happiness, of depression, back to happiness, because markets cannot hide their emotions. So again, I remind everybody that funds, big money, it takes up to 3 months to put on a position. So anything that happens today, tomorrow, this week, next week, whatever, it doesn't change their position in any meaningful way. Okay, so what we're dealing with is just that price marketing exploration. Okay, and that's why you don't make money. I mean, you can make money in short term. That's not what I'm saying. That's why you can't make money, day trading, because it doesn't. Long term, you do, right? Not day trading, but long term swing trading at the very minimum, um, you can make money, right? But this election days, Fed days, news announcement days, GDP days, very volatile, very volatile. It's just reaction. Okay? All right, so let's go through the analysis. And we'll start with equal weighted. Let's get out of this mode. All right, equal weighted back into structure, right? We went incredibly bearish and then bounced right off of it. Back into the structure and back into this range where it had difficulty. Okay, now this is starting to look more of like a high base. Okay, so when you start spending enough time up here, eventually you're going to resolve to the upside. All right. Now we have to, of course, keep analyzing, keep figuring out what it wants to do. Um, the uh, dividend weighted S&P within the range. Uh, the VIX is starting to fall off, and that's good because election is finally here. So the fear is starting to dissipate. Um, so that's coming down. But again, I remind you that, oops, I remind you that so long as we are above this trend line, we're still bullish, right? New York Stock Exchange popping, closed the gap-ish, kind of, created a new gap, all right? Dow Jones popping hard, right? Remember we talked about this one? Tight, 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 tight. Up. Magic, right? So tight, 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 tight. Boom. You're going to get that relief, right? You're going to get that relief rally. And then we're going to see how it behaves and go from there. S&P 500 went incredibly bearish, right? This is what I'm talking about. And then popped right back into structure. And I say when it comes back to structure, it's bullish, right? Or bearish, whichever the case is. So huge, huge move up in the S&P 500. And we are coming up on that 63-day moving average. 63 days because we want to see what the moving average is telling us. Are people or funds net buyers or sellers? And for right now, the net sellers, but price is racing towards that 63 day. Okay, there it is. So it's racing towards that 63 day, but it is below the 63 day, and the 63 day is flat for now. Let me get this out. All right. NASDAQ. Right to the top of the channel, like we were talking about. This one is where we left off yesterday in the small caps, right? Which it looked kind of funky. Nice little cup, rounding bottom, bullish formation, and bam, broke in a very thrusty way back into structure and continued higher to that previous high. Bounced off of it. Now we're going to see how it's going to behave. All right. Transportations, after breaking the structure, it didn't even break the previous low. Bounced. Now remember, previous lows are potential area of reversals or pauses. Okay, so it doesn't have to come all the way down. It can do this, this, or this. You don't know where it's going to bounce and if it's going to bounce, but this is the potential. Remember, we don't know when a wave is going to end. That's not up to us. All right, so let's continue. Google and all the fangs continues to bounce today. All right, so we have this channel now, which is the right portion of the M pattern. Okay, so we expect price now to trade within this area until eventually it either breaks down or breaks down, meaning it comes down here and then just keeps on going. It won't go in a straight line, of course. And World Stock Market Index back into structure. Skip that one. China, structure above a structure, bullish formation. It's holding, so that's good. It didn't make it back into structure. And I mean this structure right in here. Emerging markets, back into structure, but again, this is not appropriate. Same with this. Japan made a decision. It started to fall, right? That started to do what it was supposed to do. And I can't get rid of the arrow now. There we go. And then right back up. Right back up. Bullish. And Australia, a higher low, right? So we have this one and this one. And let's get rid of all this because this is very noisy. I kind of leave things in there to see what I was thinking about at the time when they were doing it. We'll leave the higher low in there. All right, there we go. There it is. Okay. So anything above this trend line, bullish. All right. Anything above that trend line is bullish. Where is it? Okay. So it's a 1, 2, 3. Rising wedgie looking thing. Higher lows. Looking good. All right. Nifty 50 bounced right off the support line. Right. Cosby bounced. Europe bounced hard. Very hard. Look at that. Right. Megaphone-ish structure that just broke out incredibly bullish. Broke this broke down as well. All right. Remember, when it breaks down, doesn't mean it's game over. Right. It's not the end of the world. It just means that it's not going higher. All right. Let's see what else. UK. Back into structure. Broke down. Come on. Broke down right in here and right back into structure, and look how thrusty it is, right? So remember this, right? From failed moves comes fast moves, right? And you had a limp tick, and that is correcting now. Taiwan pushing back up very nicely. Uh, Brazil also bounced. Didn't hit the bottom here, so that's bullish. Right? It didn't have enough sellers to push it all the way down to that structure. And when the sellers are exhausted, right, broke the previous low, starts to bounce, you start thinking, okay, this is a subtlety. It's a small piece of the analysis, but one you should pay attention to that there weren't enough sellers to push it all the way down. Saudi bouncing, still outside of the structure. Oil back into structure. Okay. So we met our target 33. Now it's bouncing up to 38, back into structure. Very thrusty kind of move. And again, you see the tight, tight, tight. All right. Tight, 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 tight. Boom. Okay. These are repetitive patterns. They don't change. All right. Bitcoin bouncing higher. Ethereum, Litecoin, there's nothing there for us to analyze. Gold, boom, right back up. And look at where it's at, right? In this important structure. Let's get rid of this. Clean it up a little bit. Again, I do this live, right? I don't prepare and what I'm going to say, and I just open it up. I view it the same time you do. All right, so if this breaks out, ho ho ho, get ready. Okay, boom. And it would make sense, right? Because whoever gets elected, they're going to have a stimulus either way. Doesn't matter. So that's bullish for gold. Silver will skip this. Real estate bounced. Nothing there. It's noisy. Commodities bounced a little bit off the previous structure, right? So this could end up being a break test go. What is that? Well, you break the structure, you test it, and then off you go, right? And that would make perfect sense because our compass uh, for this particular move, okay, is this. The real compass is back here, but the secondary um, compass is here. And what is a secondary compass? Well, basically it just does this and then starts to fail and then whatever. Because you can have waves within waves. So for example, let's say that this is, let me use this one. It's easier. So let's say this is wave 1. This is wave 2. It can be 1, 2, 3 up and then down. See what I'm saying? So you can't have waves within waves. I don't want to confuse you too much, but that's what I meant. I want to clarify. Palladium, it's breaking down, bouncing. Copper, not doing bad. Base metals, back up towards the high. Agriculture, precious metals, commodities, bounce back out. See, this one this is not a break test go. This is completely different, right? So now you have a different structure. All right. And remember, we need waves and structures to define risk reward, right? So, for example, if this were to start to break out, something like this, you take it to the next wave up. So this is 1, 2, 3, right? Make sense? Again, we're far away, but you want to take this trade here. That's what I'm trying to tell you. All right. Sugarcane bounced off the bottom of the trend line, but again, this structure here um, is bearish. So we still have the arrow there. Corn broke down, bounced, but it's outside of the structure, so it's having some difficulty. Needs more data. Wheat is holding, steel right up against the resistance area. Soybeans keeps battling with this trend line. We'll see how that resolves. The dollar back down. Look at that. Of course, money printing, right? So remember, markets don't care who wins. They just want to know who wins. And once that uncertainty is gone, then they get very happy about it. But again, you're up in the morning, down in the afternoon, up in the early after, into the close, and by the close you're back down again. So don't get too excited about these moves. Okay, they're designed to provoke emotion. If you're bullish, you're like, yeah, it's all right. And then when it starts going down, the bears, yeah, 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 they're all excited. That's not what you want to be doing. All right, so dollar back down. The euro bouncing off the previous low. Remember we talked about that yesterday? I said, look, it's at previous low. Look for a bounce. Great Britain pound back into structure. Strong, very strong. US dollar is even falling against the Turkish lira. Oof, oof, that's embarrassing. US dollar ruble selling off. US dollar CAD. US dollar is getting crushed. Okay, remember I told you we needed more data on this one. Uh, Australian dollar, US dollar, boom, breaking out. Actually, this is a very nice buy here, right? Right in here. This is a nice buy here. New Zealand dollar, same. Dollar continues to fall against the yuan, the Chinese yuan, renminbi. And here's the euro index. I looked at it yesterday. I typically don't often, but again, it was showing the previous low test. And again, I'm going to point out that it didn't come to the bottom of the channel. So this was never valid, by the way, this line, because this is not an anchor point. Okay. Now we can anchor it because it has a hook. So it's 1, 2, 3. This is now the structure, which is bullish, by the way. It's a bullish structure. And here we are. So here's your compass. Here's your wave 2 and wave 3 coming next. Ten-year continues to push higher. Wow, look at that, right? Higher interest rates. You can interpret that as bullish if it starts to break out, that things are going to improve. Or you can interpret it that more money printing is going to require more QE, an expansion of QE, because they cannot hold rates. Now, which is it? I don't know. We'll figure that out when the market tells us. And the 30-year bond is going down. So what it looks like, they're selling the bonds. Interest rates are rising. And you can see that an aggregate bond ETF, right, continues to fall. This should have corrected to the upside. It hasn't done so far. They're selling off, and interest rates are rising. All right. Even European banks bounced. Well, interesting. Emerging currency strategy fund still holding in here, bullish for the next move up. Financials in the U.S. within this structure bouncing. Let me get rid of this stuff now. We don't need it. KB is bouncing as well. With higher interest rates, that is good for them. Water is bouncing nicely. And let's take a look at Facebook, bouncing back towards that structure. Amazon, I can't see. So we got the 1, 2, 3 down. It's bouncing off this bottom area here. Okay, bounced right off of it. So that makes sense. Apple, back into structure. And that's the other chart I was looking at, which is this one. Okay, as a leading indicator, Apple started to break down from the head and shoulders. And what we were waiting for was, yeah. And what we're waiting for was NASDAQ to also break. So what's happening now, it's bouncing, but it's still in a downtrend. All right. So we'll still keep an eye on this. See if this starts to break down. If the NASDAQ starts to break down and Apple is leading the way down. But for now, it's holding, but Apple is holding, but holding below the trend line. All right, so let's go back to our short-term chart. There we go. Very nicely. So now it's battling with the upper trend line, right? And we are expecting for this to push higher. So what do we need to see? Well, this is what we need to see now. For price to start to consolidate in here, okay? Doesn't have to be this long, but you have to have some kind of a consolidation, and then the next push higher is going to be very bullish because it's going to break the trend line. You're going to have that um, pressure that's built right up against the resistance, okay, and that's going to explode to the upside. All right, that's what we're waiting for in the Nasdaq. The the issue that we have for today, even though we're going to cancel this, is that it's up 2.2% already, and that's the extreme normal range for an index. But it is elections, um, so we have to give it some leeway, and it will likely be a little bit higher. Now, I don't want you to get too bullish, and this could very easily fail, just as easily as it popped, because this is elections again. So, right, you could see this do this very easily, and then guess what? All the bears are going to be like, "Oh yeah, blah blah blah." But for now, the bias is to the downside so long as it remains within structure. That's the rule. All right, you can't just disregard this channel. Okay, it's still going down, and price is still within this channel. So the bias is to the downside. Right? So that's why you need that pressure to start building. Okay, and then that's why you need the break, because then it's going to be a very clear signal that this is a new wave of the continuation. Okay, let's look at the market internals. Can you guess what's going to be leading? Can you guess? Going once, going twice. You think tech is going to be leading? All right, S&P up 2% for the day, led by financials, industrials, and technology. All right, technology is in the upper range. Good. Industrials okay, but financials really lagging by energy, real estate, and materials. So that's okay. That's okay. What typically you want to see is that um, technology and consumer staples are leading the way up, right? Energy you want it to be lagging. So let's see, last 5 days. Materials, financials, industrials, and laggards, discretionary, and technology. So on a 5 day look back, this doesn't look bullish. On a daily, it looks okay. I wouldn't call it super bullish, but um, it gives me a little bit of pause. How about that? All right. We'll mark this for fun, not for a trade, for fun, to test the theory, right? That so long as you're within this channel, the bias is to the downside. And we'll do that on the NASDAQ. Any questions? All right, let's go through the volume profile. Let's go down to a minute. Let's set it to a day. And as you can see, we opened up pretty much at the point of control, the POC. We're holding there, and then boom, big thrust up, move to the next point, right, which is up here. A lot of volume going off. We're outside of the 70% of range. Pretty uniform, right? Um, but again, I'm going to point out that this area, for whatever reason, was never tested. Remember that yesterday? Never tested. They didn't even, not even a tick. All right. So when we look a little bit further back from the bottom, oh, come on, from the bottom here, point of control is way down. Okay, way down. We had a second one, and now there's a third one. So the new void will be somewhere in here. All right. So pay attention to that. We had a series of lower highs going into this morning, and they started to break down and then just exploded. I don't know what the news was because I'm sitting here playing with the freaking YouTube thing. I couldn't get it to work. Anybody can post what the news was? Nobody. All right. S&P, same thing, way above the POC. Some volumes coming in here. New York Stock Exchange, I don't think it's going to show it. Dow Jones, I don't think it's going to show it. This we won't worry about. All right. I'm going to look to see what the news was, if there was any. Just bear with me. I'll put some chill music. All right, I'm here. I'll be looking back and forth. I'll leave it on NASDAQ. That's where we set the trade, right? Yeah. So remember, the bias is to the downside, so long as it's within the structure. So far, it's doing good.
Mic off. Mic on.
All right. It's nothing. Just election day bullshit. That's it. Nothing I see. If you guys find something, let me know. All right. So I'm just gonna check over here to see what it all looks like. Facebook is bouncing off the support area. Amazon still below it. Apple we know is below it. Netflix bounced right off the support area. Google is doing okay. Nvidia is still below it. Tesla bouncing. Still below it. Alright, what's oil doing? Let's take a look at oil. We gotta do this one on a 6-month. Back into structure. I was just measuring the drop, about 10% drop. Alright, 10% pop, volatility all over the place. Oh, that's oil. Nasdaq is starting to show that. Is that correct? Oh no, that's because the line is not right. All right, right up against resistance. Again, remember, price is going to try to invoke emotions. Alright, if you look at this objectively, and again, I'm going to emphasize that what you want to see is for this to pop out, or here, it doesn't have to be above, it can be just below it, right? Start to build some kind of consolidation, and then pop. Alright, you want it to hold here, basically. I'm just checking to see if the Nasdaq is underperforming the S&P, and it is, which is interesting. Yeah, this is probably better. You can see it better like this. So as you can see, the Nasdaq is underperforming the S&P, right? Which kind of makes sense with what we were looking at with the market internals of tech not leading the way up. So interesting. How about China to the Nasdaq? China has been leading the way up relative to Nasdaq, right? See it? Double topping now. Interesting. Here's the other problem that you have this uptrend. You have the where is it? You have the 1, the 2, and then a very sharp 3, right? And then when you take those points, this is what it produces. a very, a very, very, very funky kind of structure. Yeah, to me, it doesn't look proper. It looks really weird. But again, it's election day, so you're gonna get some. Remember, particle kind of markets, right? Clearly, that's a particle market. Uh, when it thrusts up, you want it to thrust up and break out of a structure. You can make an argument that the structure it was thrusting up against was, this smaller internal structure right in here, right? So as soon as it cleared, boom, up to the top of the channel. But it looks more like a relief rally for now, for now, um, more than a significant move. In other words, it's fuckery. Because you see here, it did the same thing, right? See it? Look, what is that? I mean, garbage, right? It's garbage. All right. Okay, so what I'll do, because it looks like it's stuck, uh, I'll leave it on. I'm gonna go out. I'll be back. Not too long, maybe a half an hour. I'll just leave it on so I don't have to go back, in and out, just in case something with YouTube has a problem again. So as long as it's working, just keep it working. Don't break on me. All right, guys. Be right back. Maybe about 30 minutes max. All right. Any questions before I go? Going once, going twice, going 3 times. All right. Be right back.
Mic off. Charging battery. Charging battery. Mic on.
All right, all right, all right. I'm back. Okay, so it's stuck right up against the resistance area. All right, that's what it's supposed to do. Now the question is going to be: is this going to turn into a high base where it's going to break out or not? Okay, and we cannot know that. All right. The longer it stays up here, the more bullish it becomes. All right. Okay. Now let's measure the volume by price since the top. Okay. And we are in the upper range where there is some vacuum in here, right? A little bit of vacuum right in there. And the next, well, not the next, but the point of control will be at 11,691. It's been shifting more or less, 11.5, something like that. All right. Um, let's look at the rest of the markets just by looking at the percentage change. There's not much more going on. Okay. Um, in terms of stimulus, no matter who wins, uh, it's going to come. That's all the market cares about, right? The question is going to be how it comes. That's the question. Is it going to come in the form of bailing out states and cities? Or is it going to come in the form of, let's bail out Boeing and, you know, Wall Street? That's the difference. Okay, that's the difference. So if Trump does get elected, the the same thing that he's done up to this point, he will continue to do. Remove himself from any burden, uh, divide the problem into the states and the cities and the Democrats and the unsavory and all this malakias, all these stupid things. Okay, and run around and tell everybody, oh, everything is going great. And because if they do vote him in again, and that's what America wants, then that's what they'll get. Why would he change now, right? So the reality of the situation is, though, that over the course of the next 4 years, if Trump is elected, they will slowly start to realize that you know the the bullshit is actually going to start to affect them, uh, and they won't have an excuse of COVID. Okay, because what happens is if you don't bail out the cities and the states, and you don't control the virus in a normal manner like the rest of the world does, right? So just to give you an example, if we handled the virus in an average based on the world benchmark, deaths in the US would be around 50, 60, 70,000, not 240. But because we're running around and say, it's my liberty and it's my this and this bullshit, we ended up in a situation where, we're blocked from the rest of the world. We can't travel. We can't uh, seem to have a clear message amongst ourselves as to what we're supposed to do, what is science telling us to do, and let's follow the science, and then blame science for everything, right? That would have been the more correct way to do it. So I'm not even factoring in COVID. Uh, but what's going to happen is that unemployment is going to remain very high. The deficits are going to be high, but they're going to be mostly to Wall Street, right? The American Airlines, the Boeing's, the whatever. City states are going to be left to fend for themselves. Tax revenue would have dropped because everybody left the cities, okay, and they're all spreading throughout the country. And the cost of those cities is quite high. So when you have the tax revenue come down, you have all the stress from COVID, increasing costs, and then the government is not funding you. Well, now what? The only thing that the Fed can do is go buy their bonds, right? QE it. QE it to fucking death. Well, what does QE do? Is it an increase in deficits? No. No. What it would do is it will support the bonds and increase their balance sheet to keep the cities running, okay, and to keep the faith in government bonds, offset that eventual, because eventually they're going to have to give them something, offset that the next fiscal year, right? The deficit, and just keep pumping money to the top 5%. That's the plan under Trump. Meanwhile, unemployment beyond 26 weeks is being dropped off, and unemployment is improving. And Trump is going to be telling everybody, "Oh, look, see, everything is fine. It's fantastic, my friend. Look, it's wonderful. We're delivering. Unemployment now is 6.2, not 7.9. Look how great it is." Meanwhile, there's more and more and more people uh, unemployed and sucking off the government tit. And that's always the bone, right? You throw the dog a bone and it's happy until it's not, because at some point people are going to start to feel it and realize that they're they can't find jobs, they've been unemployed for too long, the business is not what it's supposed to be because there's not enough people consuming. All of these things factor in, but that remember that realization, the reality of that does not come till later. Trump has never been a type of person that looks forward. He just reacts to whatever happens, And it's not by design. I used to think, maybe he's doing it by design. Okay, that's good, whatever. It's not by design because you can see how he handled COVID. He didn't handle it because he's not forward looking. He just runs around telling people what they want to hear. Lockdown is going to be over. Everything is going to be great. Go back to normal. Do whatever, you know. And meanwhile, that's not how economics works. And that's the problem with political economic theories. Politicians should not be making economic decisions. And that's the problem with economists, because economists are just going to do whatever the politicians want. And if they want to have a job and they want to be recognized and they want to be, whatever, so you end up with a shit show. And that's how we ended up where we ended up. You see, QE and all this stuff back in 2008 was understandable. What are you going to do? Let the banks fail? No. What are you going to do? Not bail out all the homeowners who bought at a very low interest rate? What are you going to do? Raise interest rates? No. Of course you're going to, QE it and push long-term rates down. Let them refinance. That made sense to me. I never had a problem with that. Of course that's what you do. Okay, but look where we are today. Is it the same QE? No, of course not. So we've progressed. We've talked about how we went to a nice long economic recovery. We had one of the biggest bull markets in history. Everything was fine. And now that it's not fine anymore, well, now what? What are we doing now? Well, we're buying junk bonds. Now we're going to start buying government junk bonds. Helicopter money. You think helicopter money is going to stop? I don't think so. The helicopter money is going to be the new QE. And, they're going to keep saying, well, we're going to stimulate, we're going to stimulate, we're going to stimulate, we're going to stimulate. And meanwhile, GDP is going to be sluggish. Okay? And the more money that they print, the more it's going to go in the market. Okay? But the businesses will not be supporting that market. Right? We're going to have that multiple expansion. Well, you can only multiple expand to a certain point. Because as you see today, even today, you have interest rates rising, right? So when you increase the amount of debt, which really means you're also increasing the amount of savings, not wealth, just savings, dollar savings. When you increase that debt, the interest on that debt, that has the opposite effect of what stimulated it on the way down. It's non-stimulative. It's deflationary. If you're paying more towards debt payments to sustain the debt, because the debt is not designed to be paid off. You guys know that by now. We're not even close to that. We are just, can we make the next payment next month? That's it. That's where we're at. If I am paying more to service a debt, that means I have less to consume. If government is printing more, then that reduces consumption, right? Because government will go from 25% to 30%. Did you know that U.S. used to be 40% of global GDP, and now we're down to 25, and I think it's less now, right? And government debt used to be 10%, and now it's 25%, and now it's going to be, I don't know what it's going to be, right? 30? I don't know. So we are, economically speaking, we're heading in the wrong direction. I'm not saying we're going to hyperinflate. I'm not telling you any of these things. I'm telling you we're heading in the wrong direction. And I'm also telling you that the markets are also going to have difficulties. Okay. Yes, money will flow to asset classes, of course, right? And the fact that interest rates are rising is only going to do one of two things. It's either rising because people don't want it anymore, or it's rising because they think the economy is going to be good, and as soon as the money gets pumped in, interest rates are going to go right back down. Okay? Because there's going to be too much money chasing yield. And as soon as they see that yield pop up, they're going to go and buy the shit out of it until we go into negative interest rates. Then we go to negative interest rates, that fucks up the banks. fucks up the banks. The economy goes into stagnation. And somebody mentioned, I think it was yesterday. I didn't answer it, and it just came to my mind. Japanification. The problem with Japanification was that there was only one Japanification when the rest of the world was fine, right? And Japanification did not exist with everybody else being Japan. So it's different this time. I don't know uh, how to analyze it, how to articulate it, but when the whole world is in a sluggish, non-slow growth economy, and you end up with such huge wealth inequality because that's what's happening right now, right? What was it? The top 5, 10 billionaires made like $1 trillion or something. When you end up in that situation, you get social unrest. Okay, people are just not happy. Um, and when social unrest starts, like it has been, then you end up with other problems. Okay, and what's going to be the solution for government? Print money. Okay, so you end up in a very, very, very bad situation. Remember Ku, the guy Ku, Japanese economist, balance sheet recession. Well, balance sheet recession, okay, for 40 years, companies paid off. Okay, now what? Where's the growth in Japan? It doesn't exist. It doesn't exist. So, I don't know, to be honest with you. You think Apple and Amazon, they're going to go what? They're 1.6 trillion now. They'll go what? 2 trillion, then 2.5 and 3 trillion. Market will show that it's going up, and what? The economy will be fine. I, what is the extent? Um, what is the extent of the bull market? There's a law of diminishing returns, right? We've talked about that a million times. What are you going to go up? 3 trillion? At some point, you reach limits, right? Not that numbers are limited, but the whole entire structure is limited. And it keeps, I kept thinking about um, back in 2010, 11, 12. I kept thinking about what Minsky was saying, and that, stability is inherently destabilizing, right? Yeah, okay, that's true. And I also, that he said that, first you're going to have a financial crisis as debt piles up. And remember, debt is savings in the hands of the very few. And then that will get progressively worse, right? The next one will be even worse than the previous one, which this is obviously worse than the banking crisis. And then the one after that is going to be even worse, right? And look how it's playing out. It took about what 10 years for me to answer that question, but it's you try to minimize risk. You minimize risk. You minimize risk. You minimize risk. We'll bail you out. We'll bail you out. Don't worry. We'll bail you out. We'll and you and you and you and we'll bail you out and you out. And you're minimizing that risk, but you really are increasing the risk. There has to be a healthy amount of risk in everyone, from you to your business to the massive corporations. All right, there's got to be a certain amount of risk. It's healthy, but when we're numbing that risk, we're headed in the wrong direction because eventually money printing will become a problem, and then it won't be able to do what it's doing now to suppress the risk, and then that's when things blow up. Is it going to happen tomorrow? Of course not. But you see how I was bitching before this, right? If they're cutting taxes now and they're increasing deficits now, what are they going to do in a recession? right? And look what they're doing, right? There's no strategy. What's the strategy to get out of this? What's the strategy under Trump, for example? And I don't even know if fucking Biden can deliver or not, but whatever. Let's just skip that, right? Um, what's the strategy? There's no strategy. Deny that COVID exists. Okay, we'll deny it. Accept it, and then all people die. Fuck them. It's not our problem. Let's go back to normal. Okay, let's accept that too. What about the structural damage to the economy? How are you going to fix that? We couldn't fix it 10 years, it almost took in the last recession. 10 years to bring unemployment rates all the way down to 3.4. And that was mostly due to demographics and the trough that we had between millennials and the boomers, right? Because you hit that trough and then it appears that there's very low unemployment. Well, yeah, because there's a trough right between there. So now what? You see what I'm saying? If it took a decade and it was just a interbank problem, and now you have this massive global economic problem, I I don't know. Yeah, I don't know, but I know that Trump is not the person to do it. Okay, I'll tell you that straight out. I don't like the guy. I admit it. So take that into consideration. He's got no plan. He's got no leadership, no vision, no nothing. He's just a fucking mouthpiece. That's it. Infomercial. That's it. What is Biden? I don't fucking know what Biden is, but I do know that he's a politician. He understands how the system works. He understands foreign policy. He understands a lot of things, right? He knows a lot of people on both sides of the aisle. He's not some newbie, right? So, what can he do? I don't know. But I certainly think that his approach is a lot better. Deal with COVID, bail out the cities, right, and the states. That's why the federal government exists. Uh, you have to tax the rich to a certain extent, not too much. You can't get crazy with that. Um, do you want to create some kind of infrastructure deal to get people back to work? That's fine. That's okay. There's nothing wrong with that, but nothing crazy like the real progressives. Oh, we're going to spend $6 trillion and we're going to, tear off the roof off of every single house and business, and we're going to do this and crazy stuff. That was extreme. But at least you have a plan. At least I don't know how it's going to work out. Nobody knows how it's going to work, but at least there's a plan. At least there's a plan. It's not a reactionary kind of economy sucks print QE. Not my problem. Fuck you. States and cities, right? Uh, I will say it again. Keep an eye on the rents in these big cities, New York, San Francisco, Los Angeles. Keep an eye on that. A lot of people are fleeing the cities, and the cities are the workhorse of America, right? Keep an eye on that. Think about like for example, um, the family diners we had in Philadelphia, right? Everything all very successful, right? Very profitable. Everything was great, and now you go downtown, it's a ghost town. There's nobody there. So what happens to those businesses? What happens to the value of those buildings, right? What happens to the rents when nobody needs to be downtown to work, right? How many of those businesses, which are the successful businesses, are going to blow up? Too many structural problems. Too many structural problems. But like my friend Adam here, every time he sees the market go up, it's going up, it's going to break out, it's going, people get very excited with the stock market. They think the stock market is the economy. It's not, and I'm not saying Adam thinks it's the economy. I don't think that. But that's what happens, right? That's why to Trump it's so important, the stock market. Because you can say, ah, look at the stock market. Oh, it's going up. Yeah, but everybody else is unemployed, right? So why do these moves occur, right? Look at this thrust up move. Why does this occur? To provoke emotion. It's marketing. It's the same thing Trump does. This is not something that you invest in. Oh, it moved up. I'm going to be an investor now, right? These are just emotions. And they do them because it works. It always works. It always gets people excited one way or another. It doesn't have to be up. It can be going down. Oh, I'm shorting. I'm shorting. I'm shorting. The market's down. I'm shorting. And then what does it do? Goes back up. Right? Look at this. Straight down, back up. How much emotion did this create in people? How much emotion did this create in people? That's why the market does it. It provokes emotion. You cannot fall for that. All right. Here is a more structural way of looking at the market. That it's waving up and down, consolidating, falling, consolidating, falling, consolidating, falling. Okay, within this channel. That's meaningful. Look at the daily. Okay, it's going straight up. Is that a normal market? Of course not. This is designed to provoke emotions. Okay, so I think if people start to understand that and they start to monitor themselves, am I getting too excited? Is Nick right? Is this just one of those, let's provoke emotions? Should I wait for price to thrust, perhaps consolidate in here, and then take the next move up if it breaks? Right? That's the professional thing to do, the smart thing to do. If you're just running around with vague hunches and feelings and running on political theories and the market somehow says something to whatever your belief is and whatever, forget it. You're wasting your time. You're wasting your time. What do we say about this one? Straight up, straight down, pause, straight down, up again, down again. What is this? This is investing. This is trading. This is macro. It's garbage. But every single time, people get all excited about it. Comments start to rise. I don't know. I hope that makes sense to you. All right, let's go back and take a look at the previous low and see where the point of control is. Because we've done the point of control from the previous high, which is 11.6, whatever it is. All right, and then from the previous low, the point of control is exactly where we are. Right? So all the information, all the trading in this entire uh, segment of the market, and it goes back to September 28th, 29th, whatever, this whole entire thing, the most amount of volume that went off is right here. This is the point of control. This is equilibrium. This is the fairest price to do business. So the fact that the market went up to this point, you know, is not surprising, right? Can it go up higher? Sure. Why not? The, the structure, the channel is pointing in one direction. As I have shown you over and over and over for about 3 weeks, maybe even more now, the opposite occurs at some point. Okay, we don't know when. We're looking for the clues. We analyze. We wait for more data. And then we study it, right? And then when the risk reward is appropriate, we take the trade. Long, short, doesn't matter. All right. Monitor yourself. When you get too bearish, when you get too bullish, look at this move here. Look at that. Oof. Oof. Oh, excitement. That's it. We're going up. This is the market. Remember, the market cannot hide its emotions, right? As humans, we can hide our emotions. If we're pissed, if we're not pissed, your boss comes around and tells you something that pisses you off, you're going to smile. Inside you, though, the market is doing this, right? So pay attention to these things. They're important. They're important. Monitor yourself. Know thyself. Know thyself. All right, good. So high base continues. It's 1 o'clock now. Everybody's out to lunch. Makes sense. Um, I put this on just for demonstration purposes. This is not an actual trade. That so long as price remains within the structure, that the bias is to the downside. So we talked about that. We're looking at the one day volume by price. We're outside of the range of the 70% of where volume took place. We're outside of that. We're exploring the upper range of it. And we have hit the normal upper range of an index, which is about 2%. And message of the market is bullish. Obviously, for today, it's bullish. The internals, not so much. Okay. Yes, there's tech up there, and let's take another reading of it while we're sitting here. All right, so market is up 2%, a little bit less than it was before, and is led by industrials, financials, and consumer discretionary, and then technology is somewhere in the middle. And then laggards, energy, materials, utilities. And that's the way it should look down here, right? These three. But again, it's not led by technology. And then when you look at the Apple, let me pull this up, right? And let's take this to a 1 year chart. Okay, so when you look at Apple, Apple is not participating in the same way the Nasdaq is. So that makes sense, right? You trust but verify, right? You want to make sure that's what's going on. That's the message of the internals. So um, again, you go back to February. You had a flat top in Apple. You had a rising Nasdaq in euphoric land, but it was not led by the leaders. And ultimately, the leaders were right, and the market collapsed. So now, again, we're in a position where the leaders are not participating. And the market is, I don't want to say it's up, but at least it's holding. It's holding here, right? It's holding. The market is up today, uh, but this is still remains broken. All right. Um, Netflix, right? Bouncing. Okay, so that's good for the bull case. Google is okay. It's always been the leader. Nvidia is lagging. It's not a very big stock. And then Tesla is still below. It's broken. Okay. Amazon is broken and Facebook is bouncing. And yeah, it is what it is, as Trump would say. All right. So China, okay, small time frame, kind of consolidating. Okay. Taking a look at the S&P 500 has pulled back more so than the Nasdaq. Okay. Um, Dow Jones, a little bit of a pullback. Gap up, right? Gap up, run and fade. New York Stock Exchange fading. VIX, okay, continues to fall. 35, still high, but again, as long as it's above this line here, it's bullish. Germany, it's in the, where's the top? Here's the top. So since Germany started to fall, the point of control is all the way down here at 11,534. Went through this gap here, okay, came into a little bit of resistance. Let's see how it holds. The megaphone structure has broken to the upside. We're in an uptrend. Okay, seems to be holding a lot better than the other indices, right? So if we take it to a 1 day, point of control still below it. It's also outside of its range. Yeah. Okay. So again, it's election day. Place your bets. Yeah. Yeah, this is for degenerate gamblers. It's a dream, right? If you're pro-Trump and the market goes up, somehow validates who you are and you feel good about yourself and it's great. And then if Trump wins and the market goes down, you're like, oh, this is bullshit. It's manipulated. Same thing with Biden, right? Market goes up, Biden wins. Oh, I'm validated as a human. And that's the way people think. It's unfortunate, but that's the way they think, right? It's like soccer games, hooligans. If their team wins, they're somehow a better person. Their team loses, they suck. They go home and kick their dog. It's crazy, but that's human nature. All right. So consolidating. That's it. There's nothing really to talk about. It's just a dead day, right? Dead day. Any questions? Anybody? Anybody? No matter what happens today, guys, doesn't matter. We're just going to go either slightly left or slightly right. That's it. Printing will continue, right? Doesn't matter who's in power. Um, it's not going to validate you as a person, right? Or invalidate you. We are just looking at these things from an economic perspective. What is the best thing that we can possibly do for ourselves? What should we be doing, right? From an objective perspective, from a completely objective perspective. And then, you go from there. So you look at the market, for example. Thank you very much. So you look at the market and you say, okay, well, we're going to increase deficits. All right, great. So that means we've got to borrow from savers. Okay, great. And then we're going to stimulate, and then that money is going to go through the household income, right? The savings to profit savings. And those savings are invested back in the stock market, bonds, stocks, commodities, which make their way back into the government. Okay? Now, how this productive economy operates matters. Okay? If you're the federal government and your states do not have enough money to operate because people are fleeing those cities and those states, and the tax revenue is falling and unemployment is falling, I'm sorry, rising, okay, and long-term unemployment is falling, you end up with a very nasty kind of an economy because it cannot recover. Cities are raising taxes so they can fund themselves, right? The income revenue is not there to tax, and you start to going into a deflationary spiral. Look at Greece, look at Europe, right? So if suddenly states are going to become like Greece and Italy and Spain and Portugal and whatever, well, how is that going to work? How have they done? So it's not what I think. Forget about what I think. What I think is garbage. Look at Europe. How has Greece performed? How has Italy, Spain, Portugal, even Germany? See, Germany used to be like, oh, we're so cool. Yeah, let me wave the finger at you. Yeah, you lazy Greeks. Remember that? Yeah, but the problem with Germany is that if Greece is not functioning properly, then how are they going to go out and buy BMWs and Siemens, stoves or whatever, right? So it comes back and it bites you in the ass. It's not. See, for a period of time, you appear to be smart and, you know, moralistic father figure and waving fingers everywhere. Yeah, but my friend, the Greeks, the Spanish, the Italians, the Portuguese, they're buying your BMW. Who are you going to sell them to if they're not functioning properly as an economy? And that's the problem with the federal and Trump, right? If Trump doesn't bail out the states and the cities, then guess what? Unemployment is going to be high, and tax revenues start to fall, and deficits start to rise. You see? But that's long term thinking. It requires some effort other than just print, right? So, again, I mentioned this yesterday that there's only so much of an economy, right? It's 100%. It's a pie, pizza pie, whatever. Right? And the government is 25% of, I can't even do it right, 25% of GDP, and then 10% is investment, right? Okay, so the other, um, what is it, 65% that's left over is consumption, which is actually more like 70, but I think now it's falling to 65, if I'm not mistaken, or 60 or something. Okay, so if we are going to increase deficits and then the government becomes a bigger pie of the economy, okay, well something has to give. It's going to be investment that has to shrink, and it has to be consumption that has to shrink. Okay, so then you go from 65 to 60, right? Why is there a need to keep on producing if you're consuming less, right? So you end up in a bad bad situation. It makes it very very difficult to to recover. See, when debt back in the 80s was introduced, because I don't remember my parents running around with credit cards, right? My mom eventually got one credit card, and then two, then three, and whatever. And then credit became such a big part of the economy. Right up to the 70s, we brought women into the workforce, and then we brought credit into the workforce, and all that prosperity. Everybody was consuming, consuming, consuming. And and then when all the women came into the workforce, all the credit came into the system, and then finally by 2000, when all the homes were being used as ATMs, right? As long as the prices of the home could go up, you could refinance. Everything was fine. Prosperity everywhere, my friend. Look how great Clinton is, how great Bush is, how great everybody is. We love everybody. Yes, my friend, we love you. And then you hit 2007, 2008, and suddenly, you know, it's not there anymore, right? The prosperity is starting to dwindle away, and people are losing their asses. and real estate, right? ATMs, homes are not ATMs anymore. Guess what? You go into a stagnation mode. And that's why I keep saying the deficits in of themselves are not the problem. Governments do not create the vast majority of money. It's banks that do, right? So if you get to the point where deficits have to keep increasing all the time, well, you reach where we call the coffin corner, you know, where this is where the airplane stalls. It can't accelerate fast enough to keep flying, and it can't slow down, and then you get the coffin corner, then you start to stall. So that's where we are now. We are stalling on a macro level because we just need more and more and more and more and more and more deficits, more QE, lower interest rates, which are at zero essentially. So that's not going to help anybody. And then we end up in this situation where what they were bitching about in 2008, no one is bitching about today, right? They should be back and saying, look, told you so, but they're not. Because now is the time to be bitching about deficits. What's that? What do you mean I'm not bearish? The structure, look, let me take this out. This structure is bearish, bearish, right? JK, you hear me, brother? You there? Hello? Type a yes, please. This is bearish, right? Why? To the top, right? Malakias. Malakias means many things that are stupid. That's what Malaka is. Malaka is different. Malaka is can be my friend, mostly used as friend. Malaka dikan is whatever. Or it's malakas. You know, that's a derogatory. You're not my friend then. But yeah, so it's a bearish structure. And then I've shown this before. I'll show it again. Why is this a bearish structure? Okay, so let's go take a look at the Nasdaq back in time. Oh, this thing is driving me crazy. It doesn't it doesn't delete itself, and I have to keep ticking it until the window pops up. It's annoying. It's the same thing as here, right, Malaka? Right? It's the same pattern. Da? Yet, da? Right? So that's Nasdaq, right? I can show it to you another as well. Da? Yes? Bearish? M pattern? Right? Where's gold? Mm, da? Bearish. Yep. Does it have to go immediately down? Of course not. Right. Where did it go since? Oh, went a lot lower. Right. Uh, I don't know if we can do it in oil, but yeah, we can. Where is it? Yes. Bearish. Even this, even as small as this is also an M pattern. All right. So don't confuse my long-term um, analysis with the short-term stuff. Not the same thing. But it is important if you're not sure about what I'm saying, please do ask so we don't get confused. All right. Okay, cool. What else? Market internals we checked. The volume by profile we've checked. Um, we had a double bottom last night. Uh, Not last night. Yesterday. Okay. We talked about that. Double bottom. Oh, that was 2 days ago. We get the move up. Okay, that's good. Any other questions? Habibi. Anything on Twitter? Yeah, lumber. Yeah, that's that's seasonal, by the way. The fact that lumber came down. Um, yeah, if you're an investor and you're not sophisticated enough, yeah, that's okay. Let me explain to you this way. If people are talking about stocks, reduce your risk. Okay. Uh, it's not about you're not picking tops. You're not picking bottoms. You're not trying to make money off of the deal by reducing risk. And I think this is a very popular misconception that somehow you are made to feel bad if, God forbid, you took your risk off. You reduce your portfolio 40, 50%. No, that's not. I don't think that's correct. I think it's just a way to get people to stay involved in the market. Well, just keep buying. Yeah, but when things are not good, why should I keep buying? Well, you're just going to dollar cost average in. Well, yeah, but if I have $100,000 and I'm putting $500 a month or whatever, 1,000, how many thousands do I need for me to make a meaningful impact to that 100,000? You see what I'm saying? It doesn't. I don't know. I don't understand it. But anyway, you reduce your risk, and the reason you reduce your risk is because you're never going to make money in this environment like we are today. Okay? This is not where you make money. This is where you can lose money. Okay? And the sensation of, well, we had the longest bull market in history. Soon as this whole COVID thing is off, we're going right back to it. Yeah. Right? No. You don't know that. You got to let things settle. So don't try to make money here, is what I'm trying to tell you. Reduce your risk, even if you lose some 10, 20, 15%. Why? Why? Because this is when you're going to make your money. Here. When no one is talking about stocks, no one is talking about the economy. No, I mean, if they are, it's just whatever. This is where you make your money, my friend. Here. Years of boredom. Years of this is where you make your money. Okay? So, you know, do you need to be involved here? No. Do you need to be involved in all this here? No. Right? Now, having said that, when the market goes down, okay, comes down, does whatever the hell it does, and then whatever you took out up here or whatever you took the money out, I don't know where, doesn't matter, and you start reinvesting it here. I'm not saying it's going to go that low, but I'm just saying if you start to reinvest here and then it just keeps going down, then you did what you were supposed to, right? You're not being greedy. It's just you reduce risk, and then at some point it came down 20, 30%, whatever it came down, and then you're putting your money back in with the uh, intent that eventually this will go back up, and it will. It always does. There's no question about that. But there's nothing wrong with reducing risk. Right? You're not selling because you're greedy. You're trying to pick tops or bottoms, or again, it's the way the marketing works that I disagree with. The way people say it, try to make you feel guilty for taking your fucking money out. Fuck that. You know, well, if you take it out, then you're just being a speculator. Fuck you. I don't need to be in this fucking shitty economy and this shitty market. I'll be in it when it's boring. How about that? Make sense? And that's why I made these, the series about how to create an economy from scratch. If you haven't seen that, please go back and see it. You don't need to be an economic expert and you don't need to be an investment trading guru that's going to quit your day job and you're going to fly around in a Gulf Stream and have a yacht and a big house and tell your boss to go fuck off. That's garbage. That's marketing. Forget about it. You should understand the basics. You should understand the difference between what Trump is saying and what Biden is saying. You should be able to pull out and draw this economy from scratch and say, okay, well, if we don't bail out the states, right? They need money, or they'll default. Will they default? No. There's other ways of keeping them afloat. Well, what's the other ways? Well, we can do quantitative easing. The 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 central bank will buy the bonds for the states. Is that a long-term solution? No, it's not a long-term solution. Okay. Is that going to work forever? No, that's not going to work forever. Because eventually you're going to run out of bonds, right? So understand this, and again, if you go step by step, I think it will help you. Um, the government and the incubator economists believe that the government can just print dollars, and those dollars have value. The dollars equal value. The act of printing equals value. It cannot be value. It's not the way it works. You have to work for it. You have to produce. You have to be innovative, efficient to create an economy because it's the economy, it's the production that creates value for the dollar. Make sense? Big facts? This MMT stuff, we'll just print. We'll just print. Oh, well, that sounds great. That's like saying, hey, Michael Jordan, hey, well, my friend, 3 seconds left on the clock. No problem. Just put the ball in the net. No problem. No problem. Just put the ball in the net, my friend. Yes, you're half court. So what? What's the problem? Or the other ones now with the COVID. Oh, let's just open up and just take care of the elderly. Oh, okay. Well, fuck. I, I never thought of that. Yeah, yeah. Yeah, just put the ball in the net, my friend. Man, it's not the way it works. Here's a good example again with the personal savings. Okay, personal savings spiked in April. Is it because the government was pumping all this money into the economy? MMT tells you that government debt equals private sector assets. It's our savings. So why did savings peak in April? You see, what checks, stimulus checks were not going out in May and June and July, right? Of course they went. So why did savings go down? I thought the helicopter money was supposed to pump us up, pump us with savings. What, deficits were not enough? 22% of GDP? It, it's a lie. They're using magic. Savings rise because people fear that they're not going to have a job. Okay, consumption goes down. When that happens, that's a recession. When the recession hits, the government comes in and stimulates to offset that savings. Remember, if somebody's saving, somebody else better be fucking consuming to maintain that consumption. If they're not, you end up in a deflationary spiral. So, I mean, I understand. I'm not against deficits, and I think I have to make that clear. I'm not against deficits. Sure, you could use deficits to help the economy, to help the people who are unemployed, to help businesses to a point. But if you're going to sit here and bail out American Airlines when they were buying $12 billion worth of their stock at $86, or United was doing it, I forgot who it was, right? And then the recession comes and, oh, by the way, give me free money. Well, go fuck yourself, my friend. You didn't prepare for the bad times, right? You don't deserve to be bailed out. You're buying back stock, artificially manipulating earnings per share, giving yourself bonuses, and then when the shitty times come, you run to government. It's like the Bitcoiners. Oh, we love Bitcoin because it's independent of governments and central banks and what? They stole